Okay, this is chapter 1, class problem 9, and we're going to record some transactions on like a spreadsheet down here, okay? And this is a guy, Chad Wilson, who established a business to manage rental property, and he completed these 10 transactions during June. And we'll have to record each transaction separately, all right? And the instructions are to indicate the effect of each transaction, and we're not going to do the balances because I don't have room, using the following tabular headings. So cash, accounts receivable, supplies, accounts payable, and then a capital account, drawing account, then fees earned, then rent, salaries, supplies, auto, and miscellaneous expense. All right, so here we have our assets, and these assets are equal to the liabilities plus owner's equity. So if I put a transaction in that just affects cash, there's got to be another side to it. All right, it either has to maybe decrease accounts receivable, or maybe we paid off a payable, or maybe money was put into the company by the owner. All right, now I'm going to have to flip back and forth here. This problem is in your pro copy book, so you can follow the transactions there, but I'm going to go back and forth and record the answer here. Okay, it's a little crappy looking, but it's okay. So the first one is we opened a bank account with a deposit of $30,000 from personal funds. Okay, that was the first thing he did. So I'm going to go here, and this is our first transaction, and we've got $30,000 in cash came in. All right, I hope these aren't too small, and that's going to increase our capital account by $30,000. Okay, it's like a transfer from personal funds to the company. Two different entities. And next we purchased office supplies on account for $1,800. So for the second one, our office supplies increased by $1,800, and it said that we bought them on account, so we didn't pay cash for it. We increased the payable by $1,800. Okay, then this is our line right here. So these two sides have to equal, right? So our supplies increased and accounts payable increased. With the first transaction, cash increased, the capital account increased. Okay, now the third one, we received cash from fees earned for managing rental properties of $10,000. Okay, received cash. All right, that's always a good thing to key in on. So for 3, cash increases by $10,000. We received cash, and then we've got fees earned. That's a revenue account. Increases by $10,000. And the equation stays in balance, right? For 4, we paid rent on office and equipment for the month of $4,500. So this is rent. We've got office and equipment rent for $4,500, and it's paid. That means the cash is going out. So for 4, I'm going to show it like this: $4,500, a decrease in cash, and that's going to be rent expense, right? Now remember, the expense accounts are negative anyway, so we're increasing a negative with these. It's a little bit confusing, and we only record transactions like this in the very first chapter, just to give you an idea of how transactions affect accounts. In the next chapter, we've got another way to do it, because you could never do this with 600,000 transactions per day, for example. All right, you just couldn't do it. So for 5, we paid creditors on account, $1,250. All right, so for 5, we paid, so that means cash is going to go down, $1,250, and we decreased what we owed. We decreased our payable by $1,250. Okay, that would also go down. All right. In 6, we billed customers for fees earned for managing rental property, $16,800. Now we billed them, which means we didn't get the cash in. So this is 6. That would mean my accounts receivable increased by $16,800, And fees earned. Okay, we earned it. We already did the job. So we can recognize the revenue even though we don't have the cash. All right? 16.8. Then we paid automobile expense, including rental charges for the month. So we paid it too. Okay, so that's cash out. All right, make sure you watch these words. Okay, paid means the cash is gone. Billed is no cash at all. There's another paid, another paid. Here's received. All right, so all those transactions would have, we would have cash moving. So we've got $750 for automobile expenses and miscellaneous $980. $750 and $980. So auto expense, before I forget, $750 and miscellaneous expense is $980. And that's a total of what? What is that? 16, 17, 1730? A decrease of 1730 of cash. Okay, and that's 7, right? So again, that's 16, 17, 30, yeah. Okay. In 8, we paid office salaries of 4,000. And again, it's that word paid, all right? Whenever it just makes it easier if you can get cash down. So it was 4,000? Yeah, 4,000. So this is 8. I've got a decrease in cash of 4,000. Decrease cash, and this was office salary expense, increased by 4,000. And don't forget now, these are all negative, okay? For 9, we determined that the cost of supplies on hand was $680. Therefore, the cost of supplies used was $1120. So that's a little bit trickier. Okay, they had supplies of $1,800 on there. And they took an inventory, and the inventory told them that there was $680 of supplies in there. So they used up $1120. So what we're going to do is decrease the supplies account by $1120. Hope you can read that. And then record supplies expense, $1120. Okay. If you read that number, that's pretty bad, isn't it? So it's 1120. Well, that's so much better. And finally, he withdrew cash for personal use of $7,500. So again, withdrew cash. So cash is going out. So our last transaction, $7,500 of cash is coming out. And we've got our drawing account has $7,500 in it. Okay, and don't forget this is subtracted. So if you wanted to make it, I don't think the book does it this way, but you could do this and at least they look balanced, You could show them as negative numbers. So then when we add across here for our totals, I'm going to have to do cash separately, but we've got $16,800 in accounts receivable. And then this was $680, right? $680 in supplies. That's our balance. And we owe, what's this here? 50. So that was $550 in accounts payable we owe. And we've got $30,000 in capital. And the drawing account is $7,500. We're going to have to show it like that, though. Fees earned, revenue that we earned was $26,800. That's a positive number. But in order to do that, we had to pay rent expense of $4,500, salaries expense of $4,000, supplies expense of $1120, auto expense of $750. And finally, miscellaneous expense of $980. Okay, so I added up our total cash. Total cash was 21,020. If I add up all my assets, I get 38,500. And then I added up the accounts payable and the capital and the drawing and the revenue and all the expenses, and I got 38,050. So our total assets equal our total liabilities and equity. Okay. All right.